Blessed day, everyone. Good morning po, sir. Our group is tasked to report on macroeconomic and industry analysis. The first part had been reported by Mr. Norgy Pareño, and myself will be tasked on reporting the second part, and Mr. John Janelle de la Cruz will be focusing on the third part. My task is on presenting how investors and analysts organize analysis and portfolio decisions. The format of the report will be making use of the five W's as our outline, and these are looking at who, why, what, where, and when. For the who, we'll be looking at the economic units who are normally involved in the macroeconomic and industry analysis, since they are the one who will be involved in the investment management process of planning, execution, and feedback in order for us to have an income or appreciation with our investment. And we need to look at why is it important for us to do macroeconomic and industry analysis, and what is the analysis that I am tasked to discuss. That would be fundamental analysis as one method of security analysis in order for the economic units be able to decide on which investment will be best for them. And we have to look at the domestic issues as well as the global issues in terms of macroeconomic and industry aspect, in when we have to look at investment, and also looking at the short term and long term investments, no, as well as the short run and long run um, effect of the investment decisions that we are going to make. Now, who are the economic units? According to Wikipedia, we have three, and the first one is the government. And the area that would discuss in detail, no, the government finance concern is under public finance. The role is on policy decision. And what policy are these? One would be fiscal policy, which focuses on the government's revenue collection and spending decision, which are actually done by the Congress and the administration. Then another would be monetary policy, which focuses on pursuing objective on price stability, as well as looking at money supply, interest rate, and this is actually actions taken by the Bangko Sentral ng Pilipinas. So the role that they are performing is more of a regulator. Then the second economic unit would be the firm or the organization, and which finance would discuss details as to firms and organizations' investment decision. That would be under corporate or managerial finance. And they are actually, as an investor, they are institutional investor because they are quite investing, no, a large volume, no, of securities, and they would look into the risk and return trade-off, wherein their focus is on expected return because it's future oriented, diba? And looking at the cost of capital related to the investment that they are going to make, considering the macro and industry analysis, and also looking at the prospects of the firm's growth, their productivity, because it's crucial for us. Sabi nga natin, no, with investment management, our focus is on the appreciation of the value. And the last economic unit will be the individual or the household, which would be detail the uh, discuss if you have personal finance. And as an investor, as an analyst, they view risks as losing money. Because the individual would actually be looking at their personal financial goal. So the life stage would matter, right? Uh, because as an individual, it depends on how informed you are. Ang tinitingnan mo diyan yung sa retirement mo, how you are going to invest, am I going to accumulate appreciation of value when it comes to wealth, houses. These are the considerations that you're doing if it is the individual. Now, can a government be an investor and analyst? Yes, they do. Because the government investment would look into capital formation and capital transfer, 'di ba? Kasi they are investing in road infrastructure, they are investing into schools, hospital, yun. So they are also investor and an analyst. So do remember that we have three economic units because they are the ones who would actually be making macroeconomic and industry analysis, especially so if you are a government and a firm or an organization. Why is it important for us to do macroeconomic and industry analysis? Because this would help investors to get an idea about the direction of change in the capital market. Also, it would help assess sustainability of investment projects that will improve the welfare of the beneficiaries and the country as a whole. This would also identify investment opportunities, no, in order for us to develop our competitive advantage and help organization understand market condition. This would help the firm forecast demand and supply and consequently will be able to determine financial returns to the business. Uh, Ultimately, all of this would actually assist us in the valuation. No, the reason valuation of what your securities or valuation of your investment opportunities, because it's not only financial asset that we can invest, but also um, in commodities, also in other properties. No, so analyzing macroeconomic factors does not only tell us as an investor whether to buy or sell or when to buy or sell, but it's more on looking at whether the environment is friendly or not. Di ba yun naman ang importante if we would like to make an investment. Yes, valuation is crucial at the same time, knowing uh, is it good for us to invest or not. The third W will be what analysis can facilitate macroeconomic and industry analysis. That would be through fundamental analysis. And so, with that, we'll be able to measure the security's intrinsic value by examining the related economic and financial factors. Thus, we'll be able to determine the stock's real or fair market value. With that, we can determine if the market price of the asset tends to move towards its real value. Kasi that's supporting the theory, no, that support fundamental analysis. Then, if we were able to find the value that an investor can compare with the securities market price, we can now make decision whether to buy or sell. We normally buy if the security is underpriced, and we normally sell if the security is overpriced. The good thing with a fundamental analysis is it gives us the right information to make rational decision. And because we are given the right information, we'll be able to identify or detect red flags. Thus, it will serve as a warning. So that's somehow good for us. By making use of fundamental analysis, would be able to determine, 'di ba, uh, individual companies that are performing well and what are our investment opportunities. Okay? So, what are the approaches then in fundamental analysis? We have two. The first one is a top-down approach, which focuses first on macroeconomic factors. Thus, it is also sometimes called the macroeconomic approach, and also facilitating qualitative analysis, wherein we make use of intuition or intuitive analysis, using our basic understanding of economic principle to hypothesize prices. On the other hand, with bottom-up approach, we first look into the microeconomic factors, combined with um, quantitative analysis, that is looking into the statistical techniques and mathematical uh, model for us to be able to combine the economic principle or theory uh, to determine the or establish relationship uh, between prices and economic variables to hypothesize prices. So, what are the factors that we normally assess using top-down? We have economic outlook, economic indicators, political environment, the fiscal and monetary policy, also the market valuation, the sentiment of the economy related to business cycle, while bottom-up analysis would be looking at whether we have equity investment or fixed income investment. So we look into interest rate volatility, credit evaluation if it is fixed income. And if it is equity, we have to look at um, regional dominance, the product or the services that is distinctive to the organization. Then for portfolio decision, we have the regional and country allocation, the industry and the sector allocation. Then we have your security selection. Let's have the pillars of fundamental analysis, which wherein the analyst would typically study in the order of economic analysis, looking at the factors of business cycle, monetary and fiscal policy to productivity to determine the overall state of the economy. Then the second would be industry analysis, which would determine the strength of the specific industry by looking into industry structure, competition, the product quality, cost element, regulation. Then the third one, the last one, would be the company analysis, so that it would show the financial performance of the company issuing the stock. Why are we doing all of this analysis? Because we would like to ensure that we're going to arrive at the fair market value for the stock. You have to remember that fundamental analysis is usually done from macro to micro perspective to identify securities that are not correctly priced by the market. Let's have the wrap up of fundamental analysis. We learn the two approaches, top down and bottom up. We learn the inclusions or the three pillars, the economic analysis, the industry and company analysis, as well as the aspects making use of quantitative and qualitative aspect. And we have to remember that fundamental analysis will be useful for long run analysis of long term investment decision of our um, looking at the stocks and other securities. Considering the fourth W, of macroeconomic and industry analysis, we are looking into the global and domestic investment decisions. Thus, we have to assess the global specific risks in terms of terrorism, anti globalization movement, cyber attacks, poverty, and environmental safety. As to country specific risks, we have transfer risks, war and ethnic strife, the macroeconomic disequilibrium, the sovereign credit risk, the cultural and religious heritage. Then the last one would be the firm specific risk, business risk, foreign exchange risk, and governance risk. All of these risks that we have to focus on are would actually be contributing to the probability of loss because we made an investment at the global market or domestic market. And uh, why we have to look at macroeconomic and industry analysis because it would provide us diversification, although of course, it comes with higher transaction costs and currency volatility and liquidity issues. So do remember that in macroeconomic and industry analysis, uh, we have to look into global investment and domestic investment for us to be able to diversify and reduce portfolio risk. We're now in our last W. These are looking at the short run and long run time interval for macroeconomic and industry analysis according to Olivier Blanchard. For short run, we have year to year analysis of what happened in the economy and the industry. For medium, we have approximately a decade or over a decade. And for long term, we have 50 years or more. This time interval will be important for us to be able to differentiate no, the macroeconomic problems and industry challenges based on the different models that we're going to use in valuation. Finally, before I close my presentation, according to Benjamin Graham, the father of fundamental analysis, if you want to be rich, learn not only to earn, but also to invest. Thank you, classmates, for listening. Make sure that when we make macroeconomic and industry analysis, we drift and in making investment decisions, that is, do it right the first time. Now we have Mr. De La Cruz to present his part of presentation. Good day.